Well, welcome back. ExxonMobil posting mixed results moments ago, beating on the bottom line but missing revenue expectations. Take a look at the stock, up 2.25% right now. It's still down 26% over the last year. The oil giant is also adding a new board member after months of activist pressure. The company expects 2021 cash flow to cover capital expenditures while maintaining the dividend. Of course, we reported yesterday, and we now know that ExxonMobil had conversations with Chevron at the beginning of the pandemic to potentially merge. That was one story. It was not ongoing talks. Joining me right now is the former Shell Oil president, John Hofmeister. And John, it's great to see you. You have been on the front lines of what has been an incredible merger period for the oil industry, creating ExxonMobil because of the mergers. What do you make of, first off, what you're seeing in the industry today and the fact that Exxon executives had a conversation with Chevron back in March when the pandemic first started and the expectations called for a big decline in demand for oil?
Well, yes, I did live through the mega merger period of the late 90s and the early 2000s, and a lot of good names disappeared. They were amalgamated within a larger supermajor, as you said, with respect to ExxonMobil. One of the questions that has to be asked is, how big is too big? It sounds like a simple question, but it's a very complex question, because when you're talking about merging big entities with their respective legacies, their respective cultures, their respective relationships around the world, their geopolitical posture, their geological positions around the world, this is not a simple act. It doesn't surprise me that there were conversations, probably among many companies, with respect to responding to the pandemic. And it would be normal in a time of crisis to consider all of your options and to perhaps consider a pathway. But again, you come back to that core question: how big is too big? And that has to be answered by each party, because, you know, there's winners and there's losers in every merger. And some people just want to be winners, not losers.
I think this is a really important point. How big is too big? But John, what is the result of mergers in general? It's job cuts, right? They're looking for synergies to cut out costs. What about the policy that we're dealing with? Joe Biden killing the XL pipeline. What does that mean for jobs? Even as Exxon has this new push into green, announcing a new business unit, it's spending $3 billion on low-emission technologies.
Well, that's a good point. I think that there are going to be, what do you call it? There are going to be setbacks. There will be setbacks as we think about how the energy system of the 21st century transitions from what it was in the 20th century to what it will become in the 21st century. But no one should underestimate the size and the importance, the scale and the materiality of the oil and gas and coal industries in the world today. 85% of all energy, and wind and solar just don't have the energy density to make up for a total transition from one to the other. So this is a big question. There will be job cuts, there will be job additions as well in different sectors of the energy system.
Especially with the XL pipeline going away. John Hofmeister, thank you. We got the Morning Buzz right after this. Stay with us.